We're continuing our focus on the program on the economy. Right now, we're talking about a very critical aspect, which is spurring in the rapid development of the industrial sector. So much talk has been going on, so much debate, some controversial, some not so controversial, but whatever it is important and imperative that we begin to fast-track development, rapid industrial development, that is, in the country. Joining me now to talk about how we can redesign Nigeria's economy for rapid industrialization is a financial advisory consultant, Tilewa Adebajo. Good morning to you, and thank you so much for coming in.
Yes, good morning, Harriet. It's good to be on again.
So we've been talking about, well, not you and I, but there's been ongoing conversation about how we can spur rapid industrialization of the Nigerian economy. You know, right now we're seeing restructuring of various key sectors, key segments of the economy, for instance. But let's talk about this strategy, as it were. For us to have a strategy, we need to be able to identify what sectors there are that actually contribute, for instance. So let's talk about those key contributors to the GDP.
Well, thank you very much, Harriet, for that. The issues around industrial development is nothing new in Nigeria. The problem we've had is the consistency and the seriousness to be focused on key areas of implementation. As you rightly pointed out, the key, if you want to industrialize, you have to take a look at what segments make up your GDP. Now, out of our 500 billion plus GDP, agriculture contributes the highest amount to that, which is about 23%, followed by oil and gas, which contributes about 17%. And then you have trade, which is about 16%, and manufacturing, which is 7%, which is where you find the discrepancy. Manufacturing should be more than trade, and
exactly.
You find trade and manufacturing together is about the same. If you look at trade and manufacturing together, it's about the same output as agriculture, which is the largest. So that is where you find the disparities or the distortions in industrialization. Power also contributes less than 0.5% to GDP. So if you take a look at those critical sectors, that is really where we need to focus on, and it's really nothing new. There's no doubt that we need to improve on the agricultural development. We still import a lot of things we should otherwise manufacture here, and that is really where we need to focus on. And as you've said, what is our industrialization strategy? That is something that we need to agree upon as a country, and whatever changes of government we have, there needs to be consistency in that policy. You take a look at the Chinese, for instance. We import rice, we import so many things, but the Chinese will not let you do that in their economy. The big American companies, Ford, General Motors, Boeing, even Airbus, European companies, if you want to sell in China, then you have to come to China and set up your manufacturing plant, heavy industry, and then you can sell your products in China. They will not let you import your products into China, so as Korea has done successfully. And these are the sort of industrial models we need to adopt. But unfortunately, we have created what we'll call a rentier state, where people constantly seek rent, either in form of subsidies or in form of waivers. And it is these vested interests that constantly clog the development and want to turn us into an import-dependent economy.
We'll talk more about that, Tilewa, in a bit. But does Nigeria really have an industrial policy? Because the countries you've just listed are countries that we buy a lot of stuff from, rice, for instance, even clothes and equipment as well. And yes, looking at your breakdown of how much these sectors contribute to the GDP, we have manufacturing at 7%. The manufacturing sector depends a lot on power, which also has another issue. So all of that, and the fact that we're trying to get our economy running as fast as it can, points also to the fact that do we actually have an industrial policy that helps all of this come to play?
Yes, we do have an industrial policy. We've had industrial policies over the years. If you study the Nigerian economy and the documentation and the laws, not only do we not have industrial policies, but we have some laws in place to help with industrial development, and we have incentives in place to help with investments and industrial development. We've started in the 70s from our industrial development plan, National Industrial Development Plan, and quite recently, with the last administration,
Nigeria Industrial Revolution Plan,
they came up with something else, which is just another. It's just another documentation of what exists. But our key industrial policy or strategy is that of import substitution industrialization, which now looks more with a lot of backward integration. But the question is that we haven't implemented that. But having said that, we've had some successes, Harriet. And it's just a shame that we have not been able to transfer the successes we've had into other sectors of the economy. Take, for instance, 10, 12 years ago, we used to import cement into this country. And Nigeria has one of the largest limestone deposits in the world. We turned that around in 10 years, and not only are we now self-sufficient in cement production, we export cement now, and at the end of the day, we've successfully done the backward integration, and we're a powerhouse when it comes to cement production. So why can't we replicate that success with rice, with sugar, and all the other areas in manufacturing that we need to do? And that's really is the key. It's about the will to implement and sustain this policy, as opposed to what I've talked about, this vested interest that wants to keep the economy on the waivers and the importation.
Yeah, but you see, what can be done to make the incentives not seem so attractive anymore? Because when the incentives are not so attractive, you won't put your money where you feel you're not going to make any profit. And so at the end of the day, you begin to look at how you can replicate that success that was recorded in the cement industry in terms of the backward integration plan that was successfully done in that particular segment of the economy to the rice, sugar, and other key sectors of the economy.
Well, the incentives were provided in form of waivers, which were constantly abused. And you give a company a waiver to import X amount of cement or whatever, or rice. And the reason you're doing that is that you have targeted a few group of what you would say the key players in that sector who are profiting from that sector to be able to make that investment backward. But what tends to happen is that they just use that waiver, and the same waiver they're supposed to use 10,000 metric tons, they can roll it over 10 times, and they don't pay the duties. Now they're sealing off all their factories, as we can see, or their warehouses, but they get the waivers, but they're not making the necessary investment in output in terms of raw material production for sugar and also for rice.
So should those incentives be removed for now, at least until we can jumpstart the economy to where we want it to be?
Well, it's a holistic plan, because you see, we have to take a look at the enablers of industrialization. And it's not just one item. You have to take a look at your trade and investment policy, which is very critical. Then you have to also take a look at financial intermediation. With the excess supply of money, there's close to 20 trillion naira in our economy in terms of deposits. And of that 20 trillion, 25% of that is in dollar deposits. But that's not really the issue. The issue is the fact that with such excess supply of money, interest rates are artificially high at 24%. With that sort of interest rates, you cannot develop an economy. So we need to restructure or reform the banking sector and the monetary policy to provide at least single-digit interest rates to be able to spur industrial growth and also long-term financing. So there's also issue of resources. There's also education, manpower training. The universities are not what they used to be. So people are looking outside to bring expertise to be able to run certain factories. So there are many other issues, but we do have the basics. We have the raw materials, we have the resources. And the power sector you're talking about, that can be fixed easily. I mean, we're close to it, but at the end of the day, we have to let the IOCs who have the gas, we have to let them have the responsibility of developing the power sector.
But then let's talk about the institutions now. Do we have the right institutions to support this industrial plan? Because the plans are many, the policies are plenty as well, but then implementation is really very key. So do we have the institutions, right institutions, to drive it?
Yes, we do have institutions. We have the legal and the regulatory framework, but we now need the political will. We need the process, and we need the people to make sure this happens.